Recording.
Done. Yes, my dear friends. Hello. Welcome you all. Welcome you all to the second day of discussion with respect to the important aspects of our CA Inter GST syllabus applicable for our exam. And already in the previous session, that is on yesterday's session, we have spent some good time on discussion about some brilliant topics like supply. We spoke about the concept of introduction to GST, and we also discussed about one more interesting topic known as value of supply. Today, first, we'll spend some good time on discussion about the concept of time of supply, and after that we'll spend some good time on discussion about another brilliant, interesting, important topic known as input tax credit. So without delay, we'll spend some very good time on all these interesting topics so that we become very perfect with these topics which are very, very important from our exam. And as one more interesting topic today, first, we'll spend some good time on discussion about the concept of time of supply, and after that we'll spend some good time on discussion about another brilliant, interesting, important topic known as input tax credit. So guys, I hope the voice is audible.
Yes,
kindly mute yourself, please. I'm telling again and again, please mute yourself. Yeah. Thank you so very much, guys. Come on, let's proceed. So today, first let me spend some good time on discussion about a topic known as time of supply, and post that we'll spend some good time on discussion about another very interesting and important topic known as input tax credit, where a high possibility that question will trigger in the exam. No doubt about it. Input tax credit is one such topic where question will sure come in the exam. That is the reason why it's very, very important. Yeah, because it is always said and done that value of supply, input tax credit, time of supply, supply concept, these are all very, very interesting topics and important topics where a high possibility that question will definitely trigger in the exam, on which we can't take any chance. So that is the reason why I want to focus on all those areas where sure shot, gunshot questions will come in the exam. Yes, friends? Right. So without any delay, let me start discussion about the interesting topic known as time of supply. Let me proceed. What is the topic we're discussing, my dear friends? Today, let's talk about time of supply. Then only we'll talk about input tax credit. Time of supply. So this topic, time of supply, we have got two interesting sections in our syllabus. Section 12. Let me start discussion about the interesting topic known as time of supply. And the other side, we have got section 13. I repeat, we have got two interesting topics, section 12 and section 13. Section 12 deals with time of supply in case of goods. 13 deals with time of supply in case of services. So friends, I repeat once again, there are two interesting topics with respect to what? Time of supply. There are two interesting sections, section 12 and section 13. And section 12 deals with what? Section 12 deals with time of supply in case of goods, and 13 deals with time of supply in case of services. Section 12 talks about time of supply for goods, 13 talks about time of supply for services. And in that each section, we have got 6 subsections which we have to talk, which are very important. No doubt about it, on which we'll spend some good time, my dear friends. So what are two sections involved? Section 12 and section 13, which talks about the concept of time of supply. 12 deals with time of supply in case of goods, and 13 deals with time of supply in case of services. Now, first we'll spend some good time on discussion about section 12, then we'll talk about section 13. Listen. First, when I talk about section 12, which is related to time of supply in case of goods, my dear friends, time of supply in case of goods, we have got 6 subsections. First, let's talk about section 12.1. 12.1, which clearly says liability to pay tax. Pay tax, liability to pay tax, I repeat once again, what is the language given? The liability to pay tax shall be as per time of supply. Now, first and foremost important point, let me explain you why is that we are discussing this topic, because we have to understand what is the importance of this topic. Time of supply determines when the liability to pay tax arises. I repeat that line once again. Time of supply determines when the liability to pay tax arises. It clearly tells when you are required to pay the GST. For example, if service is given in 1 month, I repeat, service is given in 1 month, invoice is issued in 1 month, payment is received in some other month. So, for example, let's say Shiva Teja, a chartered accountant, have given service to client on 10/10/21. 10/10/21, and invoice have given on 6/11/21, and client made payment on 12th December 21. So if you observe carefully and look at the months, service is given in the month of October. Service is given which month? October. Invoice is given in the month of November, but payment is received in the month of December. So it is very important to know what will be the time of supply and why it is important. The reason why it is important is something like this, because the due date for payment of GST, I repeat, the due date for payment of GST is always 20th of next month. I repeat, my dear friends, the due date for payment of GST is always 20th of next month. When I say 20th of next month, should I consider 20th of November, or should I consider 20th of December, or should I consider 20th of January? That is interesting. So, if I decide that time of supply is 10th October, then I have to pay tax by 20th of November. If I decide as November, I should pay by 20th of December. If I decide as December, I should pay by 20th of Jan. Ultimately, the whole interesting point is that the due date for payment of tax is 20th of next month. So which month should be considered? That is determined based on this concept of time of supply. Clear? And the two important sections here are section 12 and section 13. Section 12 talks about time of supply in case of goods, and 13 talks about time of supply in case of services. 12 is for time of supply in case of goods, 13 is for time of supply in case of services. So it's interesting to know what are the interesting concepts in this 12 and 13. Now listen, as we discussed, 12:1 says one line, the liability to pay tax shall be as per time of supply. That point you all know, the liability will come only as per time of supply. Now 12:2 is an important section, which is a general rule. What rule is this, my dear friends? 12:2 is a general rule, which clearly says that time of supply is date of invoice. In fact, once upon a time, the answer was date of invoice or date of payment, whichever is earlier. Once upon a time, it was date of invoice, date of payment, whichever is earlier. But subsequently, law has been amended where they specified that date of payment is irrelevant. That directly the answer is always date of invoice. Even though payment is received in advance, still GST liability will not come. And that too, please let me tell you, what is the meaning of this word date of invoice? And they clearly specified that date of invoice means actual date of invoice or last date when invoice is ought to have been issued. When invoice is ought to have been issued, whichever is earlier. Come on, guys, what is the interesting language used? The date of invoice means what's the actual date of invoice or last date when invoice is ought to have been issued, whichever is earlier. So when you actually gave invoice or when you are supposed to give invoice, whichever is earlier. So big question what comes is when it is ought to have been issued. And as per law, what they told is that in case where there is a movement of goods, in case where there is what's a movement of goods, they clearly told that invoice must be issued on or before date of removal. if there is movement of goods, if there is what, sir? Movement of goods, invoice must be issued on or before a date of removal. And in case where there is no movement of goods, invoice must be issued on or before the date of delivery or make available when the product is made available to that person. Why this concept is important? Because you have to understand that time of supply is always date of invoice, and date of invoice means the actual date of invoice or last date when invoice is ought to have been issued, whichever is earlier. That is why it is important to know when invoice is ought to have been issued, and when invoice is ought to have been issued in case where there is a movement of goods on or before the date of removal, and if there is no movement of goods on or before the date of delivery or make available. And finally, in case of continuous supply of goods, in case of what supply? Continuous supply of goods. When statement is issued or payment is received, that is the time when invoice is supposed to be given. Now, what is the meaning of this word called continuous supply of goods? Practically, what happens is, a lot of times, some dealers, they will sign a contract with some people saying that whenever I keep asking the goods, I'll keep on supplying, but monthly once or 15 days once or weekly once, we'll raise an invoice or we'll give a statement. Practical example, let's say there is one cement dealer. Cement dealer signed one contract with a construction company saying that whenever construction company wants cement, this dealer will keep on supplying, and monthly once or weekly once or 15 days once, they'll issue a statement and settle the accounts. So what I put a star mark here basically talks about what is the time when invoices ought to have been issued, and that is important because time of supply is always date of invoice, which is actual date of invoice or last day when invoice is supposed to be given, whichever is earlier. So it is not just important when you give, it is also important when you are supposed to give. When you give or when you are supposed to give, whichever is earlier. So date of invoice is actual date of invoice, or last day when invoice is ought to have been issued, whichever is earlier. Very, very important point. That is why, my dear friends, we say that no liability arises. No liability arises at the time of receipt of advance. At the time when advance is received, the liability to pay tax does not arise. So it is always important to be kept in mind that in case of goods, we need not pay GST at the time of receipt of advance. But in case of service, it is not like that. The logic is simple because in case of goods, they clearly told the time of supply is date of invoice. What is date of invoice? Actual date of invoice or last day when invoice is supposed to be given, whichever is earlier. And when invoice is supposed to be given, it depends upon movement, no movement, or continuous supply. Based on that, you will decide when invoice is supposed to be given. So when invoice is actually given or when invoice is supposed to be given, these 2 dates, whichever is earlier, that becomes the time of supply. In general, given by section 12, subsection 2. Moving forward, section 12.3. Which section, guys? 12.3. So before that, I'll ask one question. Think and do. Okay. So let's say there is one Tata Limited company. They supplied goods to one person, Mr. A, on 29th October 2021. When did they supply? 29th October 2021. And Tata Limited actually gave invoice on 2nd November 21. So here invoice is given after they supplied the goods. Yeah? Yeah. Now tell me, guys, what will become the time of supply? Please tell me, guys. You can drop a message in the chat box. You can drop a message in the chat box, please. Yeah. No doubt about it. The answer will become what, my dear friends? Definitely 29th of October. 29th of what, sir? October. So please understand that. So please understand that, my dear friends, that even though invoice is actually given on 2nd of November, the answer will still become 29th October. The logic of that point is very simple, because actual date of invoice or the date when invoice is ought to have been issued, whichever is earlier. Actually, when they gave 2nd of November, but when invoice is ought to have been given 29th October, that is why time of supply will become 29th of October. Interesting concept is, no doubt about it. Which section of this? Section 12.2, which is what rule, sir? General rule. Where it clearly says time of supply is what? Date of invoice, which is actual date of invoice or last date when invoice is ought to have been issued, whichever is earlier. Then moving forward, section 12.3, time of supply in case of, what is that word, sir? Time of supply in case of goods which are covered under reverse charge mechanism. I'm sure you would have heard this word called RCM. RCM is those cases where supplier is not liable to pay GST, receiver is liable to pay GST. But of course, in your syllabus, you do not have a list of goods covered under RCM, but in your syllabus, you have got list of services covered under RCM. Example, insurance agent to insurance company, GTA, who did not opt for 6% CGST, then legal services, then we also have a concept about arbitral services. Like that, so many concepts are there. Recovery agent to bank, director to a company. Like this list of services are there where supplier is not liable to pay GST, receiver is liable to pay GST under reverse charge mechanism. So those cases are clearly given under RCM. But in your syllabus, you do not have what are those goods which are covered under RCM. What is there in your syllabus is only list of services covered under RCM. But in your syllabus, you have got the concept of what is time of supply for goods covered under RCM. That is important. So what is time of supply? They told, number 1, date of payment. Or in simple line, first let me write date of receipt of goods. Date of what, sir? Receipt of goods. That means date when goods are actually being received. And of course, we are not looking at supplier point of view. We are looking at receiver point of view, because we are talking about RCM. Because RCM cases, supplier is not liable to pay GST, receiver is liable to pay GST. So we are looking at from receiver point of view. What the first point? Date of receipt of goods. Second, date of payment. And finally, third one, 31st day from date of invoice. What date, sir? 31st day from date of invoice. That means we will see the date of invoice, forget that date, and after that we'll see 31 days. So for example, if May 4th is date of invoice, 31st day will be what? May 4th means May balance we have got 27 days, 3 days in June. So it becomes 31st day will be 4th of June. That is how you have to calculate. And these 3 dates, whatever we get, these 3, whichever is earlier, that becomes my time of supply. So what are 3 important dates? Number 1, date of receipt of goods. Number 2, date of payment. Number 3, 31st day from date of invoice. These 3 dates, whichever is earlier, that becomes my time of supply. And an extra point to be added here, what is the meaning of this word? Date of payment. They clearly specified that date of payment means date when payment is entered in books. Obviously, because practically when we receive a check or issue a check, we enter in books, but the check will take some time to create in the bank account. So what they told here is date when payment is entered in books or debited in bank. Debited in bank account, whichever is earlier. Don't get one doubt. So it should be created, right? Why is it debited? Common sense you have to apply. We are not looking at supplier point of view. We are looking at receiver point of view. And from receiver point of view, the amount will actually get debited, but not created. Money is gone. Now money is not received. Very difference. Very good. So which section all this? 12.3. Time of supply for goods covered under RCM. What is the answer? Earliest of following 3 dates. Number 1, date of receipt of goods. Number 2, date of payment. Number 3, 31st day from date of invoice. These 3 dates, whichever is earlier, that becomes my time of supply. And date of payment meaning is what? Date when payment is entered in the books, or the date when payment is debited in the bank, whichever is earlier. So what are 3 dates? First one, guys, date of receipt of goods. Second, date of payment. Third one, what is third one? Come on, 31st day from date of invoice. And what is the date of payment? Date when payment is entered in books. And whose books it is? Of course, recipient books, because we are talking from recipient point of view. Please understand that, or debited in bank, whichever is earlier. And we are obviously talking from recipient point of view, because we are talking about transaction which is covered under RCM, where receiver is liable to pay GST, but not the supplier. Please get that point very clearly. Very, very important concept, my dear friends. And which section all this, by the way? This all concept is covered under section 12.3. Next. Let's proceed. Let me talk about section 12.4. Which section, guys? 12.4. 12.4 talks about time of supply in case of vouchers. Friends, you would have heard this word called vouchers. Voucher is nothing but something like coupons, tokens, Amazon voucher, gift voucher, Flipkart voucher, lifestyle voucher. So many vouchers you will get. Coupons, like time of supply in case of vouchers. They gave a simple concept where they divide into 2 situations. If supply is identifiable. So for example, imagine I gave one voucher to you. I repeat, I gave a voucher to you, which is a shirt voucher. What voucher? Shirt voucher. That means with that voucher, you can go to a shop and buy only the shirt. So that is a case where supply is identifiable. Second possibility, supply is not identifiable. That means what? For example, my dear friends, let's say I gave you one voucher where you can go to the supermarket and buy whichever item you want. I repeat, you can go to the supermarket and buy whichever item you want. So starting, did we decide what item you will buy? No, there is a flexibility for you to go and buy whichever item you want. So that's a case where supply is not identifiable. So supply is identifiable means what? We know what you are going to take. Not identifiable means you can redeem that voucher for anything. And what they told in the law is that if supply is identifiable, time of supply is date of issue of voucher. What is time of supply? Date of issue of voucher. That becomes the time of supply, because supply is identifiable, visible. And if supply is not identifiable, what they told is that time of supply will be date of redemption of voucher. So if supply is identifiable, date of issue of voucher. If supply is not identifiable, date of redemption of voucher. So if we know what you are going to take it for or use it for, then time of supply will be the date when voucher is issued. But if supply is not identifiable, we don't know for what purpose we are going to redeem that voucher, then time of supply will be the date of redemption of voucher. This is a story of 12.4. So 12.1 says liability to pay tax should be as per time of supply. And 12.2 says what? General rule. Directly time of supply is date of invoice, which is actual date of invoice, or last date when invoice is ought to have been issued, whichever is earlier. And 12.3 is what? Time of supply for goods covered under RCM. And 12.4 talks about vouchers. If supply is identifiable, date of issue of voucher. Supply is not identifiable, date of redemption of voucher. Now a doubt student is asking, sir, what if voucher is not used by before expiry? Will it still be taxed? With that concept, law is silent. Law is talking only about a case where voucher is being redeemed. So practically they might say that if voucher is not redeemed, then when it is expired, that time you pay tax. Possibility is there. But as per law so far, what is covered is only 2 cases. Supply is identifiable, supply is not identifiable. Identifiable, date of issue of voucher. Supply is not identifiable, date of redemption of voucher. That's it. Yeah, done. Next. Let me proceed. Let me talk about section 12.5. We are done with 12.1, 2, 3, 4. Let me talk about 12.5, which is something like a residual case, which will come into picture in case where time of supply cannot be determined under section 12.2, 12.3, 12.4. So if 12.2, 3, 4 is not applicable, 12.5 will apply. So what is that line, my dear friends? If 12.2, 3, 4 is not applicable, 12.5 will apply. Very, very interesting line. And 12.5 is something like a residual case. And where they told simple answer. If he is required to file, periodical return. Now, common sense point, who is required for periodical return is only a registered person. Only a registered person. So, if he is required to file periodical return, time of supply will be the due date on which return is to be filed. The due date on which return is to be filed, that becomes time of supply. And in case where he is not required to file periodical return, that means he is an unregistered person, then law said simple answer, time of supply will straight away be the date on which tax is paid. Which day he paid the tax, that day only will become time of supply. Such a simple, powerful concept. What the line used? Time of supply will straight away be what, sir? The date on which tax is paid. Which day he paid the tax, that day only will become time of supply. Straight, simple answer given in the law. The date on which tax is paid, that day only will become time of supply. So which case all this, my dear friends? 12.5, residual case, and that too this will come into picture only in case where time of supply cannot be determined under section 12.2, 12.3, 12.4. Then only will apply residual case 12.5, which says if it is required to file periodical return, then the date on which return is to be filed. And if it is not required to file periodical return, date on which tax is paid. Clear, friends? And practically how can question come in the exam is something like this, where they will tell we don't know the details of date of invoice, we don't have details of date of payment. Like this, when they give the details, that means what? We can't apply 12.2, we can't apply 12.3, we can't apply 12.4. They might apply residual case 12.5. That's it. So if some cases there in the question where we can't apply 12.2, 3, 4, then apply 12.5. Then finally, the last point to talk, that is 12.6, something what we discussed yesterday also. And 12.6 is related to time of supply for addition in value by way of interest, late fee, or penalty. If you remember, we discussed this concept in value of supply, where we discussed in section 15.2d. 15.2 was inclusions to transaction value, 15.3 exclusion from transaction value. And in inclusion from transaction value, we discussed about section 15.2d, where we spoke about any interest, late fees, penalty. Any interest, late fees, penalty charged by a supplier from recipient shall be included in the value of supply. We discussed that. And for that interest, late fee, penalty, what will be the time of supply? Time of supply will be the date when such, I repeat the language, what is that word? Date when such addition in value is received. So when that interest, late fee, penalty is received, that time only we will treat time of supply. No doubt about it. So we'll pay tax on the interest, late fee, penalty only after it is received. And that too, we all know the important concept which we discussed in previous session. That is, this interest late fee penalty is always considered as inclusive of GST, where we do reverse working and calculate the GST liability. So for addition in value by way of interest, late fee, penalty, time of supply will be the date when such addition in value is received. So when it is received, that date becomes time of supply. So next month 20th, we are required to pay GST to the government. That's it. This is the end of story of discussion about section 12, time of supply in case of goods. Now moving forward, my dear friends, let me talk about time of supply in case of services. This is governed by section 13. But let me write an interesting point here. 13, 1, 2, 3, 13, 4, 13, 5, 13, 6, 13, 1, same as 12, 1, which says the liability to pay tax shall be as per time of supply. 13, 4, same as 12, 4, which talks about time of supply in case of vouchers. If the voucher related to goods, then 12, 4 will come. If voucher related to services, then 13, 4 will come. 13, 5, same as 12, 5, residual case. 13, 6, same as 12, 6, addition in value by way of interest late fee penalty. So for that addition in value, for that interest late fee penalty, I repeat, for that interest late fee penalty, time of supply will be the date when such addition in value is received. Now what is called addition in value? Addition in value by way of interest late fees penalty. So for such addition in value by way of interest late fee penalty, time of supply will be the date when such addition in value is received. So what we have to talk is only 13.2 and 13.3. This we have to discuss. And that if we discuss, matter is over. Time of supply is over. So let's spend a little time and complete first. Come on, let me talk about which section first, my dear friends. Section 13.2. Time of supply for services, general rule. What rule? General rule, where they told if invoice is issued within time. Now, quick question is, what is time?
See, what is the
Come on, what is the word, sir? If invoice is issued when? If invoice is issued within time. Now, what is that word within time? That within time they told generally it is invoice must be issued within 30 days from completion of service. And in case of banks or NBFC, invoice must be issued within 45 days from completion of service. In general, invoice must be issued within 30 days from completion of service. But in case of banks or NBFC, invoice must be issued within 45 days from completion of service. And what they told in the law is that if invoice is issued within time, invoice issued when? Within time, then straight away time of supply will be date of invoice or date of payment, whichever is earlier. Since they told whichever is earlier, if payment is earlier, that only will become time of supply. So if any payment is received in advance, then the advance date only will become time of supply. If you remember in goods, the story was not like that. In goods, we clearly discussed that no GST liability will arise at the time of receipt of advance. But in service, it is not like that. For advances, GST liability will apply in case of advances for services. Clear? Date of invoice or date of payment, whichever is early. And if invoice is not issued within time, if invoice is what? Not issued within time, then time of supply will be date of completion of service or date of payment, whichever is early. So there are two interesting cases there. What are two interesting cases? Case number 1, if invoice is issued within time, what is the answer? Date of invoice, date of payment, whichever is early. And if invoice is not issued within time, then date of completion of service or date of payment, whichever is earlier. This becomes time of supply. Clear? Now, some important point to be noted, which you have to get a clarity upon. Listen carefully, sir. So for example, let me ask you one question. There is one person, Mr. A, who has given service to Mr. B. Service is on 10/10/21, and Mr. A has given invoice on 6/11/21, and Mr. B made the payment on 10/12/21. Tell me guys, what will be the answer for time of supply? You can message in the chat box. No doubt about it. The answer for the time of supply is very clearly what? Date of invoice or a date of payment, whichever is earlier. Why? Invoice is issued within 30 days. When invoice is issued within 30 days, it will be date of invoice, date of payment, whichever is earlier, which becomes 6/11/21. And imagine, let me ask you one question. If invoice is issued on 16/11/21, which date, sir? I repeat that question. Please see that carefully. Invoice is issued on 16/11/21. Then time of supply will be what? If it is given on 16/11/21, then time of supply will be 10/10/21, because it becomes date of completion of service or a date of payment, whichever is earlier. So if invoice is issued within time, date of invoice, date of payment, whichever is earlier. And if invoice is not issued within time, date of completion of service or a date of payment, whichever is earlier. So these are the interesting areas given in time of supply, especially with respect to general rule. Now, I'll ask you an interesting question, think properly. So there is one company, Airtel. Airtel has given service to Shiva Teja for October month. And what they have done is, 6th November, they raised a bill of 1800. How much bill they raised? 1800. And Shiva Teja, what I have done is, I paid 2000. Can I do that? Yes, because I want to pay bill round figure. I paid 2000. Now let me ask you one question. Is that 200 rupees extra what I paid? Is it tip for Airtel? Is it tip? Answer is no. It's of course not a tip. It is something like an extra payment what I made to Airtel, which Airtel will adjust in next month. Correct or not? So what they told is that from Airtel point of view, what is the excess received, sir? Excess received is 200. It is like advance. Obviously, it is like advance only, because next month payment you got now itself. It is as simple as an advance. And what they told in the law is that for such excess received what you got, they told one line. If excess is up to 1000 rupees, if excess is up to how much, sir? 1000 rupees. I'm not talking about bill amount. I'm talking about excess amount. If excess amount is up to 1000, then supplier may pay tax this month itself, or at the time when invoice is issued. I repeat, at the time when invoice is issued for such excess amount. And common sense point, when they'll give us for excess amount in next month, when they give a bill, in that bill there are just this 200 rupees. Clear, my dear friends? I repeat the example once again. Please see very clearly what is happening there. There is a company known as Airtel. Airtel gave bill to Shiva Teja, and they gave a bill of how much? They gave a bill of 1800 rupees. When they gave a bill of 1800 rupees, Shiva Teja directly paid 2000. How much excess he paid? 200 rupees. So from Airtel point of view, how much excess they got? 200. That 200 is something like an advance. When advance comes, you have to pay GST now itself. But what they told is that one small benefit they gave, stating that if excess what you got, if that excess is not more than 1000 rupees, if that excess, I repeat, if that excess is not more than 1000 rupees, then supplier can pay tax now, or you can pay tax at the time when invoice is given for such excess amount. That is next month, he is getting some benefit. So this story will come into picture only when excess amount is up to 1,000. Imagine Shiva Teja paid 3,000. So from Airtel point of view, how much excess Airtel got? Airtel got 1,200. So when they get 1,200, they should pay GST by treating time of supply in that month itself when advance is received. So this benefit of postponement will come provided excess amount is not more than 1,000 rupees. Very interesting concept, guys. No doubt about it. So this is the story of 13.2, my dear friends. Finally, one last point to talk, that is about section 13.3, which is time of supply for services covered under RC. Time of supply for what, sir? Time of supply for services covered under RCM. Some interesting areas are there which you have to get a clarity upon there. Time of supply for what? Services covered under RCM. They told simple. Look at two dates. Number one, data payment. Number two, 61st day from date of invoice. If you remember, there we had the story of what? 31st day from date of invoice. But here, what is the story? 61st day from date of invoice. Date of payment or 61st day from date of invoice. These two dates, whichever is earlier, that becomes time of supply. Very, very simple answer. Clear, friends? So, 2-3 special points in that services is that one is about RCM, second is about general rule, and third is the story of that 1,000 rupees. So, if excess is up to 1,000, then the story will come. But imagine Shiva Teja paid 3,000 rupees bill. How much excess they got? 1,200 rupees. So, once they get 1,200 rupees in that same month only, we will treat time of supply. Because time of supply is date of invoice or date of payment, whichever is earlier. So when they got that 200 rupees, that time only we will treat time of supply. In which month they got 200 rupees, that month only we will treat time of supply. That is a concept given by the law. That is the story of section 13, time of supply in case of services. And with this discussion, my dear friends, we are done with the story of section 12 and section 13. 12 deals with time of supply for goods, 13 deals with time of supply for services. And we are done with the beautiful topic known as time of supply, which generally keeps coming in the exam for 4 marks. Something important and of course very, very scoring. Done. So without delay, my dear friends, let's start discussion about one more brilliant and fantastic topic, which will take some sweet time because there are a lot of story involved in that, which we need to talk in detail. That is about a fantastic topic known as input tax credit. Input tax credit, which is very, very important because every time a question keeps coming in the exam for about 6 to 8 marks minimum. Sometimes 10 marks also can come. High possibility, guys. Are we ready? Shall we start input tax credit? Please message. I think a lot of guys are ready to learn input tax credit because I think one of the most fascinating, important topic. Let's proceed. Let's go. Wow, good. I love that. In fact, I know why you guys are responding like that because input tax credit topic will come in exam for 6 to 8 to 10 marks. I know. That is why it's very important for you. I know very clearly. And somebody is asking, sir, what is the tip to remember exemptions topic? My dear friend, let me tell you, exemption topic, there is no tip to remember as such, but the only point is, exemption is one such topic which you have to go through all the exemption twice, thrice. Don't try to mug up all the exemption. In exam, they'll just try to touch upon 3 to 4 points where they'll ask you whether exempt or taxable. That's all. So don't try to remember all the points and mug up all the points. So just have a very good, fair idea as to what are all exempt, what are not exempt. Because they'll not ask you a 20 marks question telling write all exemptions. They don't do that. So don't worry. Okay, done. Shall we start? Input tax credit, 8 to 10 marks in the exam. Very, very scoring. And I'm sure everybody is excited and everybody is ready to learn. So let me spend my very good balanced time on discussion about this beautiful topic known as input tax credit. And recently, from December 2021 exam onwards, they removed 1-2 rules for your exam. Rule 42, 43, apportionment of inputs and input services. They removed some rules for your exam. Good that they reduced little bit syllabus. Sometimes ICA reduces syllabus also. Generally they keep adding, but sometimes they might reduce, and like that happened. And in your syllabus, from input tax credit topic, we are required to learn about 3 important sections: section 16, section 17, section 18. This will take some sweet time. It's important, so we'll spend some good time. Get ready. Yeah. Come on, guys. First of all, as we all know, my dear friends, that we have got 2 types of supply known as intrastate supply, interstate supply. For intrastate supply, what will we charge? For intrastate, we charge CGST and SGST. And for interstate supply, we charge IGST. Come on. For intrastate, we charge what? For intrastate, we charge CGST and SGST. For interstate, we charge IGST. Now, an important point is that we have got a specific concept known as utilization of input tax credit. How we have to utilize our input tax credit? There is a specific pattern and manner in which you have to utilize your input tax credit in whatever way you want. You cannot use it. You cannot tell it is my credit, my wish, I will do whatever I want. Wherever I want to set off, I will set off. You cannot tell like that. There is a specific manner, specific pattern in which input tax credit is supposed to be utilized. Now, there can be input CGST, input SGST, and finally input IGST. Input CGST, SGST will come when you do intrastate inward supply. Input IGST will come when you do interstate inward supply. Input CGST, they told first to use it for output CGST. Second, use it for output IGST. But the point to be noted is that you cannot use CGST for SGST or SGST for CGST. Getting clarity, guys? I repeat, my dear friends, input CGST to be first used for output CGST, then for output IGST. But we cannot use CGST credit for SGST, SGST credit for CGST. Getting clarity, guys? Then input SGST, first use it for output SGST, then we'll use it for output IGST. But we can't use SGST for CGST. That point is very, very clear. Yeah, some query. Somebody is asking, sir, difficult to solve questions, please practice. Oh, wonderful. So let me tell you, my dear friends, in our YouTube channel, we posted a lot of videos solving past exam papers and also RTPs that will be useful for your revision in order to practice some questions. You can watch that videos where we already solved the problems. That part you can take it there. Don't worry. Okay. Then input IGST, first use it for output IGST. I repeat, input IGST, first use it for output IGST. Then second, we can use it for output CGST or SGST in any order or any manner. This is an interesting line. So please get clarity, my dear friends. Sir, please, very, very important. Please understand this concept very, very clearly. What is that concept, my dear friends? We are discussing utilization of input tax credit. Input CGST, we will first use it for output CGST, then for output IGST. Then input SGST, we will use it for output SGST, then output IGST. And then input IGST, will use it first for output IGST, then for CGST or SGST in any order or any manner. That means what? Whatever IGST grade you have, first use it for IGST, then balance what is left out. You can use it for CG or SG. First CG, then SG, or first SG, then CG. Or you can use 50-50 or 60-40, 70-30, anything you can do. Yeah? And please understand, my dear friends, IGST credit, we can use it for IGST. CGST credit, we can use it for IGST. SGST credit also we can use for IGST. But one point to be noted, two special points we have got. What are two special points? Listen carefully. Special point number one. So we're talking about what? Utilization of ITC. What is ITC, my dear friends? Input tax credit. Where the tax what we paid on purchases, the tax what we paid on inward supply, we call it as input tax credit, which we'll use it for payment of output tax. Obviously, no doubt about it. Clear? Now there are two special points which are very, very important, my dear friends. Please listen carefully. Special point number one. Input CGST cannot be used for output SGST and vice versa. I just told you this point that we can't use CGST for SGST and we can't use SGST for CGST. That concept is very clear. We cannot use CGST for SGST, SGST for CGST. Second special point, which is very, very important, that is input CGST and SGST to be utilized. Come, what is that line, my dear friends? Input CGST and SGST. Input CGST also and SGST also. Input CGST and SGST to be utilized. When we can utilize input CGST and SGST to be utilized only after IGST credit is fully exhausted. So that line is very, very interesting, sir. What is that line, my dear friends? Input CGST and input SGST. Input CGST and input SGST to be utilized only after IGST credit is fully exhausted. So first to use entire IGST credit. First to use what? Entire IGST credit. Then only you can use CGST, SGST credit. Without completely utilizing IGST credit, you can't touch CGST, SGST credit. Very, very interesting. Let me talk with numbers. Sir, imagine ITC, IGST 10 lakhs, CGST 4 lakhs. Of course, SGST also will be 4 lakhs only, no doubt about it. Now, let's say, for example, output IGST 8 lakhs, CGST 6 lakhs, SGST 6 lakhs. And once we claim this input tax credit, this input tax credit will go and sit in electronic credit ledger. I'm sure most of you would have heard these words already. That this input tax credit, what we are claiming, will go and sit in a ledger known as electronic credit ledger. When we are required to pay output tax, first we will use balance in electronic credit ledger. And if we still have to pay something, we will pay using electronic cash ledger. We will deposit the money into the GST account, and after depositing, we'll use it for payment of GST. Now, how will I calculate this question? Come on. IGST, CGST, SGST. What is my output figures? 8 lakhs, 6 lakhs, 6 lakhs. We have to reduce what? Input tax credit. First, what will I use? Without any second thought, first I have to use my entire IGST credit. Without using IGST credit, I cannot use CGST, SGST credit. That is the second special point what we wrote. That is CGST, SGST credit to be utilized only after IGST credit is fully exhausted. First, completely use IGST credit. Then only you have to touch CGST, SGST credit. And what is my IGST credit? 10 lakhs. So I'll use 8 lakhs here and I'll use 1 lakh here, 1 lakh here. Or I can use entire 2 lakhs for CGST or entire 2 lakhs for SGST or 60-40 or 50-50. Choice is yours. Because input IGST to be first used for output IGST and then for CGST or SGST in any order or any manner. That's what is the meaning of this word, any order or any manner. Then CGST figure 4 lakhs. SGST figure 4 lakhs. And net payable, this is 0, this is 1 lakh, this is 1 lakh. And this is how we utilize our balance in credit ledger, utilization of input tax credit. High possibility that question will come in exam for about 4 marks. And generally, it keeps on coming in the exam about utilization of credit. How do we use the credit? How do we set off the credit? You just have to keep the principles in mind so that any question you can answer. Input IGST first for what? Output IGST, then for output CGST or SGST in any order or any manner. Then input CGST first for output CGST, then for output IGST. Then input SGST first for output SGST, then for output IGST. But point to be noted, 2 special points. Number 1, CGST credit cannot be utilized for SGST. Number 2, SGST credit cannot be utilized for CGST. And second special point, very important, that is CGST, SGST credit to be utilized. What credit? CGST, SGST credit to be utilized only after IGST credit is fully exhausted. So first get your entire IGST credit used, then only use CGST, SGST credit. Very important. I hope we are clear, sir. Very important concept about utilization of input tax credit. Yes, fantastic. Good. Example makes sense. Yeah, right. Good. Very good. So that is the story of utilization of input tax credit. So let me proceed, my dear friends, without delay. Let me talk about some more interesting concepts in input tax credit. Yeah, what is that? Listen. Let me first talk about section 16 of the input tax credit topic, which talks about eligibility and conditions. Eligibility and conditions to claim input tax credit. That means who is eligible to claim credit, who is eligible to claim credit, and what are the conditions to claim credit. Yeah, somebody is asking one question. Sir, for previous question, I got tax payable 0 and my friend got cash payable. How is it tax payable 0? Already tax payable figure we calculated, it is 2 lakh rupees. 2 lakh rupees is net to payable, which can be CGST or SGST. But net to figure payable is 2 lakhs. It cannot be 0. It cannot be 0 at all. Either it can be 2 lakhs CGST or it can be 2 lakhs SGST. Or it can be 1 lakh CGST, 1 lakh SGST. But answer cannot be 0. Your answer, your friend answer cannot be different. Total bifurcation will be different, but final answer should be same. How can final answer be different? Yeah, good. Perfect. Clear, sir. Very good. Yeah. Somebody is asking, sir, can we apply whole 2 lakhs to CGST? I already told you can use entire 2 lakhs to CGST also, or you can use entire 2 lakhs for SGST also, or 1 lakh also. Choice is yours. Don't worry. Okay. Good. Then somebody is asking, sir, block credits we'll discuss. We'll talk. Block credits we'll talk very soon. Today only we'll talk. Now only we'll talk. Then eligibility and conditions to claim what's the input tax credit. First and foremost important point, who is eligible to claim credit is only a registered person. And of course, it is a common sense point. An unregistered person cannot claim input tax credit. Who will claim credit is only a registered person. But other side important point is what? What are the conditions to claim input tax credit? Now, conditions, my dear friends, there are 4 important conditions which are to be satisfied in order to claim input tax credit. Now, what are those? Number 1, recipient. Obviously, receiver only will take credit. No, recipient should have tax-paying document, and generally, the tax-paying document means invoice. So, what is the first one? Recipient should have a tax-paying document. Number 2, recipient must receive goods or services or both. So what is the first condition, my dear friends? Recipient must have a tax paying document. Number 3, recipient must receive goods or services or both. Number 3, this is dangerous. Supplier must pay tax to government. Who must pay tax to government? Supplier must pay tax to government. Number 4, recipient must file return. These are the 4 important conditions which are to be satisfied in order to claim input tax credits. And we claim credit by filing one return in a form known as GSTR 3B. In that form, we show our input tax credit and claim our credit. And the 4 conditions to be satisfied are what? Number 1, recipient should have a tax paying document. Generally, it's nothing but invoice. Number 2, recipient must receive goods or services or both. Number 3, supplier must pay tax to government. Number 4, recipient must file return. Now, some important point, listen carefully. So let's say there is somebody known as Sun Farm. What they have done is they supplied goods to one person, Mr. A, who is a dealer. Now, Mr. A procures from various persons. Obviously, he will not just buy from one supplier, he will buy from different suppliers. Now, this particular suppliers, what they do is they file some form known as GSTR 1, which is a statement of outward supplies. Statement of what, sir? Outward supplies. And in general, the due date to file GSTR 1 is 11th of next month. I repeat, they are supposed to file GSTR 1 by 11th of next month. GSTR 1 is supposed to be filed. And once it is filed, my dear friends, credit will populate to Mr. A in one form known as GSTR 2B. GSTR 2B, the credit will populate to Mr. A. Clear, my dear friends? Now, there is a possibility that some suppliers may not file GSTR 1. And if some suppliers are not filing GSTR 1, the credit will not be reflected in GSTR 2B. Obviously, because credit will reflect in GSTR 2B. Credit will reflect in GSTR 2B only if suppliers file GSTR 1. And the 2, suppliers should file GSTR 1 within the due date. Clear, friends? Now, don't get one out. So, practically, we heard about something called GSTR 2A also. Friends, GSTR 2A is also there, 2B also is there. The point is, if supplier files GSTR 1 within the due date, then credit will come in GSTR 2A and 2B. But if supplier filed GSTR 1 after the due date, then credit will be seen in GSTR 2A, but not in GSTR 2B. But not in GSTR 2B. That's very important. And what they told in the law is that very clearly, how much credit A can claim. How much credit A can claim. What A can claim is, maximum ITC, what he can claim is 105%. In fact, this was once upon a time 110%, but amended to 105. 105% of credit reflecting in GSTR 2B. That is what he can claim. How much percent he can claim? 105%. So imagine, for example, my dear friends, for that Mr. A, in 2B, credit visible is, let's say 80. 80 is the credit reflecting in GSTR 2B. But according to Mr. A, actual ITC for A is 90. According to A, actual ITC is how much? 90. I repeat, according to A, actual ITC is 90. But what is reflecting in 2B is only 80. That means what? The balance 10 is not reflecting in GSTR 2B. That's the point. So, what they told in the law is that for Mr. A, even though I repeat, guys, listen carefully. Even though actual ITC is 90, even though what's that? Actual ITC is 90 for whom? For Mr. A. For Mr. A, even though actual ITC is 90, he can only claim maximum 105% of credit reflecting in 2B, that is 80. 105% of 80 is 84. So even though his actual credit is 90, what he can claim is only 84. That's all. Even though 10 is not reflecting, he can't claim that 10. He may claim only 4, which is 5% of credit reflecting in GST or 2B. So what he can claim is only 84. Clear, my dear friends? But I'll ask you one question. If actual is 82, then he claimed, if actual is 82, then he can claim only 82. You should not tell, I will claim 105%, 84 I will claim. That is nonsense. You cannot do that. 105% is only to restrict the actual. But if actual is less, you should claim less only. If actual is 82, you cannot tell, I will claim 84. You cannot do that. You can't claim more than actual, right? Logical point. How can you claim more than actual, boss? That's not allowed at any cost. Friends, very, very, very interesting concept, friends. High possibility that question will trigger in the exam. So, section 16 deals with the concept of what? Eligibility and conditions to claim input tax credit. Yes, my dear friends. And what is the story, my dear friends? There are 4 important conditions in order to claim input tax credit. Number 1, what is the first condition? Recipient should have a tax paying document. Condition number 2, recipient should receive goods or services or both. Number 3, supplier must pay tax to government. Number 4, recipient must file returns. These are the 4 important conditions to be satisfied in order to claim input tax credit. And 2 special points. First special point. If goods are received in lots or installment, that means one after the other, little goods are coming, but invoice is already given for full. Invoice is given for full quantity, but goods are coming in parts. Invoice is given for full quantity, but goods are coming in parts. What they told in the law is that if goods are received in lots or installment. What is that language, my dear friends? If goods are received in lots or installment, then ITC can be claimed only upon receipt of last lot or installment. Last lot or installment. This point is interesting and important. So if goods are received in lots or installment, we can claim credit only upon receipt of last lot or installment. This point is clearly given in the law. Next, one more special point. In case of capital goods, friends, what are capital goods? Nothing but assets. In case of capital goods, if depreciation, I repeat, if depreciation under income tax, if depreciation under income tax is claimed on GST component also. If depreciation under what, sir? Income tax is claimed on GST component also, then ITC is not allowed. Obviously, guys, how can you take both depreciation and input tax credit? You'll be allowed only one benefit. You cannot take both benefit under income tax also, GST also. You'll be given only one benefit. So in case of capital goods, if depreciation under income tax is claimed on GST component, then ITC is not allowed. Very, very interesting. Now, one more very, very important special point. Think properly, guys. Very important. So, for example, there is one chartered accountant, Shiva Teja, who has supplied service to one client. Supply service to my client. And the supply of service happened on 10/10/21. Or let's say supply of service happened on 10/6/21. And I've given invoice on 4/7/21. I gave invoice. Okay, guys? Yeah. And from client, I got payment on 6/9/22. Somewhere in July 21, I gave invoice, and that particular dangerous client, this fellow slept off for so long time, and he made payment on 6th September 2022. After so long, the client made payment to me. Now I'll ask you one question. From Shiva Teja's point of view, what is the time of supply, sir? Come on. From Shiva Teja's point of view, what will be the time of supply? I just now taught you time of supply. Some time back only I taught you what is the answer for time of supply. No doubt about it. In this particular case, if you observe carefully, in case of services, time of supply depends upon when invoice is issued, whether it is issued within time or not within time. Here invoice is issued on 4th of July. That means what? Within time. Then time of supply will be date of invoice or date of payment, whichever is earlier. So what is the answer then? Time of supply will be 4th of July, man. Because invoice is issued within time. Correct, friends? Now, from client point of view, in the month of July 21, he got invoice. He received service. He got invoice. He received service. Shiva Teja paid tax to government. Client also filed a return. All conditions satisfied. So in July month itself, this gentleman claimed that input tax credit, but he did not make payment to me. Client is extremely happy because even without making payment to Shiva Teja, he is able to enjoy input tax credit. But Shiva Teja ego completely hurted. I made payment of GST from my pocket, even though customer did not pay me money. First problem. Second problem is, for that GST, what I paid from my own pocket, other person is claiming input tax credit. For the GST, what I paid. Got it right? So, what special point they told in the law is that if a recipient fails to make payment to supplier, I repeat, guys, who failed to make payment to whom? If a recipient fails to make payment to supplier, within 180 days from date of invoice. What is that line, my dear friends? If recipient fails to make payment to supplier within 180 days from date of invoice, then ITC claimed to be reversed. When I say reversed, that means what? Reversed or paid. However, it can be reclaimed. It can be what? Reclaimed. First we claim, then we are reversed. Why did we reverse? Because recipient did not pay to supplier within 180 days. So credit is what? Reversed. And once it is reversed, it can be reclaimed. However, it can be reclaimed once payment is made to supplier. And one point to be noted. In case of part payment, straight answer, part reversal. That's so based on how much is paid, that much reversal we do. It's a very, 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 very important concept. High possibility that question will trigger in the exam, which talks about special provision, my dear friends. And that too is very, very important. It must be reversed or paid along with interest at the rate of 18% per annum. No doubt about it. It has to be paid along with interest at the rate of 18% per annum. And under GST law, you do not have a concept of 1% per month or part thereof. We have got straight answer of 18% per annum. So the ITC, what is claimed, should be reversed or it should be paid back to the government along with interest at the rate of 18% per annum. This interest is not collected by supplier recipient. Somebody is asking, sir, is that interest including GST? No. Where is the question of including GST? Here this interest is to be paid to the government. Directly interest will pay. That inclusive GST story I told when supplier is taking interest from customer. Please get a clarity on that. Clear? So for example, to add numbers here. So let's say invoice value is 10 lakhs plus GST at the rate of 18%, which comes to 1.8 lakhs. This 1.8 lakhs customer took credit. I repeat, this 1.8 lakhs customer took input tax credit. This 1.8 lakhs customer took what? Input tax credit. But customer did not make payment to Shiva Teja within 180 days from date of invoice. Then what customer should do? He must reverse the credit. That is 1.8 lakhs what credit he has paid. He should now pay that 1.8 lakhs to the government. He should now pay that 1.8 lakhs to the government along with interest. Along with interest. And that interest is at the rate of 18% per annum. Clear, friends? So please understand here. Please get a clarity. Don't confuse yourself. There is supplier recipient. Supplier gave a bill for 10 lakhs, GST 18%, which is 1.8 lakhs. Recipient claimed input tax credit. Yes or no? Speak out. Yes. But he did not pay to S within 180 days. Then what law is telling? How much ITC you claimed? 1.8 lakhs plus interest at the rate of 18% per annum. This figure you have to pay to government. This interest you have to pay to government. So it's a very practical point. Don't get went out. So practically is somebody following? Definitely a lot of people are following. In my case, Sir Shiva Teja is also a chartered accountant in practice. I have got a lot of clients and a lot of my clients are making them follow. Practically we do a creditors aging. How many creditors are which are outstanding for more than 180 days? Pay to government. But subsequently, when payment is made to us, then R can, who is R? Recipient. Then R can reclaim 1.8 lakhs. So whatever credit he got, he then paid to government because he did not pay to supplier within 180 days. And after he makes payment to supplier, he can again reclaim that credit. That is a point what you have to note here. Very, very interesting point. I hope you got clarity, guys. Please do respond. You can message. Yeah. So what is the whole concept here, my dear friends? Recipient should make payment to supplier within 180 days from the date of invoice. If it doesn't pay, the interest will come. He must reverse along with interest at the rate of 18% per annum. And 18% from when? Some student is asking, sir, 18% from when? I will tell you. This 18% is from date of availing credit. When did you enjoy that credit? Till date when? Till date when such amount is paid to government. So from the date when you enjoy the credit, I repeat, from the date when you enjoy the credit, from the date when you enjoy the credit till the date when you pay it to the government, for that period we will calculate interest, and that too at the rate of 18% per annum. And that interest is on ITC figure only, of course. Of course, the interest is on ITC, what you enjoy. That's it. I'll proceed. Yes, done. So, my dear friends, now let me talk about something interesting concept known as section 17. And in section 17, we have got some topic known as apportionment of credit and block credits. Apportionment of credit and block credit. This apportionment of credit concept is simple, sir. If any credit is related to both exempt and taxable, then we'll claim only proportionate credit. I repeat, if any credit is related to both exempt and taxable, we'll claim only proportionate credit. So let's say for example, my dear friends, a small concept like this. Listen please. So let's say for example, a small concept like this. Let's say Shiva Teja is a manufacturer of pens as well as pencils. Shiva Teja is manufacturer of what? Pens as well as pencils. Let's say pen is a taxable product, pencil is an exempted product. Now I purchased one machine which I am using for both taxable as well as exempted. Then law is telling how much is related to taxable, that much you take credit, how much is related to exempted, that much you forget the credit. For that, we have got some special rules known as Rule 42-43, but this is not relevant for your exam. At CA inter level, they are not covered, but they are covered very clearly at CA final level. But in your syllabus, you have got the concept of block credit, which is very important. A lot of times questions keep coming in the exam for 4 marks. So I'll spend a little bit time on this. Yeah, somebody is asking some question. Sir, what is the time limit for availing ITC? In general, in which month it is related, that month only you claim credit. That month you missed out, you can claim next month. But one special point I'll tell you. Let's say some credit is related to June 2020. Some invoice is related to June 2020. We claim credit in which month? June 2020 itself. But for example, we forgot claiming in June 20. You can claim in July 2020. July also forgot, August you can claim. August also forgot, September you can claim. September also forgot, October you can claim. October also you forgot, November you can claim. But till how long? What they told in law is that maximum time limit is due date of return for September month. Due date of return for which month, sir? September month following the end of financial year. Following the end of what? Financial year. So for example, if it is June 20, it is financial year 2021. So from there, September will be September 21. And September 21, return due date is 20th October 2021. Because they use the word due date of return for September month. Due date of return for which month? The due date of return for September month. Due date of return for September month following the end of financial year. Or actual date of filing. What filing? Actual date of filing. Annual return. Whichever is earlier. Generally, annual return due date is 31st December. So if annual return is filed before 20th October, then that becomes the maximum time limit. If annual return is filed after 20th October, then maximum time limit is 20th October. So the maximum time limit to claim input tax credit is the due date of return for September month following the end of financial year. Or actual date of filing, annual return, whichever is early. That is the story of time limit to claim input tax credit, maximum time limit. Done. Let me proceed to start discussion about an interesting topic known as section 17 subsection 5, which talks about block credits. Something important. Definitely question will come because almost every time it comes. Yeah, and somebody is asking, sir, what is the actual date of filing annual return? Actual date is whenever you file, but as per law, the due date is 31st December. When you file, it is in your hands. No? Actual date is when you file. Simple. Yeah. So let me start discussion about block credits. Something important. Generally, 4 marks keep coming in the exam from this particular topic. First, number 1, motor vehicle having approved seating capacity more than 13%. So if the seating capacity is more than 13%, seating capacity is more than 13%, what will happen, my dear friends? Input tax credit is not allowed. Not allowed. So for example, my dear friends, if there is a software company, more than 13%, let me write like this. Having approved seating capacity not exceeding 13%. So the capacity is not more than 13, credit is not allowed. But the capacity is more than 13, credit is allowed. So let's take an example. If one software company purchased one car for a director use or owner use or MD use, the input tax credit is not allowed. But if that same software company purchases one bus, 50-seater bus, how much seater bus? 50-seater bus for transport of employees, then input tax credit is allowed because capacity is more than 13%. So if it is more than 13%, credit is allowed. But if it does not exceed 13%, credit is not allowed. Clear, friends? Now I'll ask you one question. Think properly and tell me here. Shiva Teja purchased one BMW car only for official use, only for official purpose. I'm not going to use that car for personal purpose at all. Only home to office, office to home. That's all. I'm not going to use it for personal purpose. Can Shiva Teja claim input tax credit? That's my question. Very clearly, law told answer is no. That credit is a block credit because the capacity is not more than 30%. But I'll ask you next question. Shiva Teja purchased one Tata Ace for transport of goods. Can I claim ITC, my dear friends? Definitely answer is yes. If there is a motor vehicle related to transportation of goods, then definitely credit is allowed. I hope you are getting clarity, friends. Very interesting and important. Next point, let me ask you. One second. Yeah. Now, let's take an example like this, my dear friends. There is one company known as PQR Limited, which is basically a travel agency. They purchased 2 cars, which they are going to use it for tourism purpose. Tourism purpose. Tell me, guys, can they claim input tax credit? 101% answer is yes. Because if a motor vehicle is used, with respect to a kind of service of engaging in the business of transportation of passenger, if they are in the business of transporting passenger, input credit is allowed. That is why Uber, Ola, if these guys, when they buy a car, they can claim input tax credit. No doubt about it. Clear? Next point. Let's say there is one company known as Maruti, and there is a Maruti dealer. From Maruti, the dealer purchased cars. Can he claim input tax credit? Can he claim input tax credit? Answer is again yes. Because in case where motor vehicle is used for further supply of such motor vehicle, you are engaged in buying and selling, buying and selling, buying and selling, then definitely input tax credit is allowed. Because it is for the purpose of further supply. Clear? And finally, one last point related to motor vehicle. That is, let's say there is a driving school. We know that in driving school, they customize a vehicle and buy it from the company. When it is a driving school for imparting training on driving, if they buy a vehicle, they can claim input tax credits. They can claim input tax credit if the vehicle is purchased for imparting training on driving such vehicle. This is a story of motor vehicle. Same logic will apply even for vessel and aircraft. So in general, credit is not allowed for vessel and aircraft. But if vessel and aircraft is used for transportation of goods, then credit is allowed. If vessel and aircraft is related for further supply, credit is allowed. If vessel and aircraft is used for imparting training on flying such aircraft or navigating such vessel, then definitely credit is allowed. Very interesting concept, friends. Because you should get a clarity upon when credit is allowed, when credit is blocked, because that clarity is not there, completely gone. So it is utmost important to have a good clarity of thought on which case credit is allowed, which case credit is not allowed. Moving forward. Next. Credit is not allowed with respect to food and beverages. On food items, whatever GST we pay, we can never ever claim credits. Friends, very, very important concept, my dear friends. What was the previous point we discussed? Motor vehicle, where the seating capacity is not more than 13%. If the capacity is more than 13%, then definitely credit is allowed. But if capacity is not more than 13%, credit is definitely not allowed. But credit is allowed if it is related to further supply, or if it is for transportation of goods, or if it is for the purpose of any driving school. So if a driving school purchases one car, which is used for imparting training. Imparting what? Training on driving such vehicle. They give a training on how to drive that vehicle. So in that case, whatever GST they pay on purchase of vehicle, in that case, credit is allowed. Very, very interesting and important point, guys. Food and beverages, outdoor catering, food and beverages, outdoor catering, then health insurance and life insurance. Health insurance, life insurance, we can't take credit at all. Then membership of club. Membership of club is something like gym or fitness center. Clear, friends? But one point to be noted here, that is, if it is obligatory for employer under any law, it should not be like employer is giving something because he loves his employees. Feelings, emotions, that is not important. It is obligatory under law. Law told him that you have to provide food, you have to provide life insurance, you have to provide health insurance. So if it is obligatory for employer under any law, then ITC is allowed. So in general, if for food and beverages, outdoor catering, health insurance, life insurance, membership of club, health and fitness center, credit is not allowed. But if it is obligatory under law, that means what? It is statutorily they told you to provide. In that case, definitely input tax credit is allowed. Then next point. Renting of motor vehicle, where seating capacity is not more than 13%. When you buy a vehicle, credit is not allowed. If you rent a vehicle, then also credit is not allowed. Very logical point. Then, next interesting point. Renting of motor vehicle, where the capacity is not more than 13%. Then, repairs or maintenance of such motor vehicle. Now, what is that such motor vehicle? Such a motor vehicle is nothing but the motor vehicle where the capacity is not more than 13%. So we discussed that when Shiva Teja purchased BMW car only for office use, All of you guys replied saying that, sir, no credit, no credit, no credit. Now this particular car, I gave it for servicing and I paid some GST on the repair and maintenance bill. That GST also I cannot take credit. So law is telling when you are buying, credit is not allowed. So obviously credit will not come even for repairs and maintenance. Very, very interesting concept. Next point. Next point is very, 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 very important. Listen very carefully, sir. That is, please listen carefully. Important concept. Come on, guys, listen. Works contract services. What is that word, sir? Works contract services. First of all, what is works contract service? Works contract service is a contract where there is element of goods as well as service. For example, let's take a practical example. Sir, I call one painter, hand over a paint box and ask him to paint a room. Ask him to paint a room. That is purely a service. But if I call a painter and ask him to buy the paint box, that is a good. But if I call a painter and tell him, you only bring a paint box, you only do the painting, lump sum contract, that is called works contract, where there is element of goods as well as service. Previous session we discussed about job work. Job work is a case where we give the materials and get the work done. Example, tailor. But here I am talking about works contract. Works contract is a case where there is element of goods as well as service. And practically, as per GST law, I repeat, practically, as per GST law, works contract concept is only in case of immovable property, that is for land and building. Clear, friends? Good. Somebody is asking one question. Sir, there are some companies, they provide motor vehicle to employees for some hours by charging some amount. Even that company is not eligible to claim ITC or not. See, simple logic, my dear friend. If they are engaged in the business of transporting passenger, if their business is only transporting passenger, like Uber, Ola, Rapido, if their business is only transporting passengers, then definitely credit is allowed. If not, they can't claim credit. Come on. So what is the point we are discussing here? Works contract services for construction of immovable property. Credit is not allowed. Any works contract service we take for construction of immovable property, credit is not allowed. But special point, number one, credit is allowed if input works contract service, WCS means works contract service, input works contract service is taken for supplying output works contract service. I have taken input WCS, I repeat, I have taken what? Input WCS to provide output WCS. Then definitely credit is allowed. No doubt about it. Input WCS is taken. Input WCS are taken some input works contract service to supply output works contract service. In that case, definitely credit is allowed. Clear, friends? For example, let's say for example, I'm a construction company. I'm giving a works contract service to my customer. And to provide that works contract service to my customer, I have taken some input works contract service. Now, what is that I have taken? I have taken some input works contract service to provide output works contract service. In that case, credit is allowed. Clear? Good. Next. Number two. Credit is allowed if works contract service is taken for plant and machinery. If it is related to plant and machinery, then definitely credit is allowed. But plant and machinery does not include. Now, first of all, what is plant and machinery? Plant and machinery is something like any machine, equipment, or any apparatus which is fixed to that by any foundation or structural support, something like any machinery, equipment, or any generator. But plant and machinery does not include, number one, land or building. Number two, telecom towers, telecommunication towers, that is your towers what they put on top of building, telecommunication towers. Third one, pipelines laid. What laid? Pipelines laid outside factory premises. So there are three things which are not covered in plant and machinery, friends. So for these three things, what will happen, my dear friends? No input tax credit, because if it is related to plant and machinery, credit is allowed. If it is not related to plant and machinery, credit is not allowed. So plant and machinery does not include land and building, telecommunication towers, and pipelines laid outside the factory. So for these three things, we cannot claim input tax credit. Clear, friends? Very, very important point. So this point is related to works contract service, goods, services taken for construction of immovable property. But credit is allowed if it is related to plant and machinery. But plant and machinery does not include land and building, telecom towers, and pipelines laid outside the factory premises. Those cases, credit is not allowed. Yeah. Before I proceed, some question. Sir, I purchased one car 6-seater exclusively for supply of goods. IT is allowed or not? Sir, in that case, you tell people who purchase BMW car, that fellow also will tell, I purchased BMW car for transporting goods and take credit. You can't do like that. You really cannot do like that. Really cannot do like that. Because whenever you buy a vehicle, in the registration document, they clearly specify whether it is a goods vehicle or a passenger vehicle. If it's a passenger vehicle, you can't take credit. You take credit only when it is a goods vehicle. Yeah, one more point. Sir, Uber and Ola will not buy any vehicles. No, sir. How will they claim credit? If they buy a vehicle, then only they claim credit. If they do not buy a vehicle, there is no question of claiming credit. Obviously. Next. Sir, can I take ITC on immovable property according to some High Court decision? That is a practical point. Some people are contesting on it, but it's not yet proven in the law. As per law, as on today, we can't take. Yeah. Somebody is asking, sir, what is a food point? Sir, food items, when we go to restaurant, hotel and all, whatever GST we pay on that we can't take credit. Swiggy, Zomato, whatever it is, on the food items, what GST we pay, we can't take credit. Yeah, that's it. So logic is simple, sir. To call it as goods vehicle, it should be written as goods vehicle in the registration document. Simple. Yeah. So government is giving ITC on goods, but why it is not giving ITC on services? Service also they are giving credit. No. If you are in the business of transporting passenger, they are giving credit. If you are buying and selling vehicles, they are giving credit. But if you are just buying a vehicle for your use, then you can't take credit. Yeah. Somebody asking next. Sir, will construction includes new construction or renovation? Construction also covers new construction, also renovation also. Both are covered. Don't worry. Good. That's all. Very, very interesting and good participation. So this is about the concept of works contract service for construction of what? Immovable property. Next point. Any more queries? Let me check. Somebody is asking, sir, what is the logic behind not using CGST for IGST? We'll use, no? I already told CGST credit can be used for IGST, and IGST credit we can use it for CGST. Definitely we can use. Done. That's it. Come on. Let me proceed to the next point. Any goods or services used for personal consumption. If anything is used for personal consumption, credit is not allowed. Obviously, common sense point. Yeah. 1, 2 more queries. Sir, seating capacity includes driver. Yes, driver is covered. Then Sorry, sir, CGST per SGST. Madam or sir, please get the logic there. The logic why they are telling don't use CGST per SGST, SGST per CGST is we know that in general the rate is 18%, 9% CGST, 9% SGST. Equally, they divided CGST, SGST. They are telling since we both divided the rate equally, you don't use your credit for me, and I will not allow you to use my credit for you. That's what center and state together decided, not to use each other's credit for each other. That's the point. Come on. Goods and services for what consumption? Personal consumption. Then, any tax paid under composition scheme. You would have heard this word about composition scheme, very popular concept, applicable to those whose turnover does not exceed 1.5 crores in the preceding financial year. For manufacturer, 0.5% plus 0.5%, trader 0.5 plus 0.5, restaurant 2.5 plus 2.5, and other service provider, if turnover does not exceed 50 lakhs during preceding financial year, current year, you can opt for composition scheme under section 10, subsection 2A, where you will pay tax at the rate of 3% plus 3%. Very interesting composition scheme concept. And any tax paid under composition scheme, there is no question of claiming credits. Because composition fellow, first of all, he is paying tax at a very small percentage of 0.5, 0.5, 3%, 3%. So that small percentage, there is no question of claiming input tax credit. And composition dealer will not even give invoice. They only give a document called bill of supply. And they are not even eligible to collect tax from customer. Very interesting. So any tax paid under what scheme? Composition scheme. Then finally, any tax paid on account of seizure or confiscation of goods or on account of fraud. You have made some fraud, you have done some, there is some seizure, whatever has happened. In that case, you paid some tax. That tax you cannot dare to tell, I will claim credit. First of all, you made a mistake. I repeat, first of all, you made a mistake and paid some tax. And that tax, what you paid, because you have done mistake, you cannot tell again, I will claim credit. Ridiculous it is. Finally, very, very important point, question will come. Any goods lost? Any goods, what sir? Lost or stolen or destroyed or disposed of or written off by way of gift or free samples. Come on, what is that line, my dear friends? Any goods which are lost. You purchase some goods. I repeat, you purchase some goods, you claim credit, and after claim credit, you lost that goods. Then law is telling whatever credit you claim, reverse that credit. Lost, stolen. Friends, the difference between lost and stolen is simple. Lost means we missed it. Stolen means some other person has shown his talent. Simple. So if any goods are lost or stolen or destroyed or disposed of or written off by way of gift or free samples. Let me give a practical example, sir. In our office, every time, yearly once we keep giving gift to employees. When we keep giving gift to employees, whatever GST we pay on that gift items, we never ever take credit. Never ever take credit. So what is the last point, my dear friends? Goods lost, destroyed, disposed of, or written off by way of gift or what, my dear friends? Free samples. Very, very interesting. Let me check if there is some queries. Yeah, anything else? Any more queries? Yeah, next. One question. Sir, if I purchase one refrigerator to supply water to my employees, can I claim credit? Answer is yes, because you did not give a gift of the fridge to the employee. You are just buying one refrigerator to use it for your office use. When you buy refrigerator, furniture items, AC, sofa, on all those things you can take credit. When you buy a cell phone, then also you can take credit. Then somebody is asking, sir, what about goods used for trial run purpose? Can we take credit? Yes. Any for trial run also credit can be claimed, because trial run is also in the course or furtherance of business. So if anything is related to your business use, credit is definitely allowed. No doubt about it. So friends, these are the various interesting points what we have got in the concept related to block credits. Very important, and a high possibility that question will trigger in the exam from this concept of block credits. Very important. So friends, I also want to discuss today some more special points in input tax credit where high possibility question will come. That is about section 18. And especially in that section 18, I want to talk about 18.1a, 18.1b, 18.1c, 18.1d. High possibility question can come. 18.1a is about somebody who has obtained a new registration, and that too within 30 days. We all know the concept that any person who is liable to be registered, he must apply for registration within a period of 30 days. No doubt about it. Then not only if he applied for registration within 30 days, then what they told very clearly is that he can claim ITC on inputs held in stock, inputs contained in semi-finished or finished goods in stock. Whatever stock is there with him, on that stock, he can claim input tax credit. This fantastic benefit they are giving, provided you apply for new registration within 30 days. Within 30 days from when? 30 days from the date when you are liable. Very interesting point. Getting clarity? Yeah, somebody is asking, sir, give an example for free sample. Pharma company, they keep manufacturing free samples. Yeah, next. 18.1b, somebody who has applied for a voluntary registration, he can also claim ITC on inputs held in stock, inputs contained in semi-finished, or inputs contained in finished goods in stock. Like this benefit is given in terms of claiming credit on the stock. Then 18.1c, very important. That is, you have converted from composition to normal. In fact, when you convert from composition to normal, government is extremely happy, because in composition scheme, you used to pay tax on quarterly basis, that too at a very small percentage without claiming input tax credit. Now, once you come into normal, you will start paying tax at higher percentage, and that too you will pay tax on monthly basis, not on quarterly basis. So when you convert from composition to normal, what they told is 18.1a plus 18.1a is what? Inputs held in stock, inputs contained in semi-finished goods or finished goods in stock. Plus, you can also claim ITC on capital goods. But how do we calculate this? ITC minus, they told 5% per quarter or part thereof. And the logic of this 5%, because under GST law, useful life of any capital good is always taken as 5 years. 5% per quarter means per annum it is 20%. For 5 years it becomes 100%. That way you can claim credit. So whatever is the total ITC you have got. So for example, it is 10 lakhs asset, 18% GST rate, 1.8 lakhs GST, and it is about 7 months old. 7 months means what? It will become 3 quarters, because per quarter or part thereof. So it becomes 3 quarters. So 1.8 lakhs minus 5% for 3 quarters, which becomes 1.8 lakhs minus 15%. The balance figure, you can claim it as credit. This 18 very clearly talks about availability of credit in special cases. Availability of ITC in special cases. And 18.1d, 18(1)(d) is applicable to a registered person whose exempt supply became taxable. So far he was dealing in exempted, suddenly that exempted became taxable. Now common sense point, we all know that when somebody is dealing in exempted, he can't claim input tax credit. But imagine once that exempted becomes taxable, he can claim credit or not? Answer is yes, because once that exempted became taxable, he will start paying the tax. So till the time it was exempted, he was not paying output tax. When he was not paying output tax, input credit is not allowed. And once that exempted became taxable, input tax credit is allowed. And that too they told same as 18(1)(c). So if you observe one small difference, my dear friends, in 18(1)(a), 18(1)(b), credit is allowed only on inputs, but we can't take on capital goods. But in 18(1)(c) and 18(1)(d), we can claim credit on inputs as well as capital goods. But one special point what they told is that stock should not be older than 1 year. It should not be more than 1 year old stock. If it is more than 1 year old stock, then there is no question of claiming input tax credit. This point is very important. Now let's take a small example to understand the concept better. So let's say there is one person X who was under composition. When he was under composition, he purchased one capital good for 10 lakhs plus GST at the rate of 18%, which is 1.8 lakhs. Now on fine day, after 10 months, he converted to normal. Now once he converted to normal, what he can do? He can claim ITC on stock. Plus, he can also claim ITC on what? Capital good. How will you calculate ITC on capital good? 1.8 lakhs minus 5% per quarter for 4 quarters, because it is 10 months. 10 months means obviously how many quarters, my dear friends? 4 quarters. No doubt about it. Clear, friends? So it is 20%. 1.8 lakhs minus 20%, which is 36,000. So balance figure is 1,44,000. This can be claimed as input tax credit. So once you convert from composition to normal, this way you can claim input tax credit. So logic is simple, my dear friends. Imagine reverse case. You converted from normal to composition. If you convert from normal to composition, then whatever stock is there, on that you have to pay tax to government. So logic you get. When you are converting from composition to normal, whatever stock is there, law is giving you credit. But when you convert from normal to composition, whatever stock is there, on that you have to pay tax to government. Obviously no, sir, because once you enter into composition, you can't take credit. But once you enter from composition to normal, you can claim credits. That's why concept is like this. Very interesting. Now finally, one last special point in input tax credit topic, that is something like this. So listen, there is a company, PQR Limited, which is a registered person. They procured a capital good, let's say one machine, for 5 lakhs plus GST at 18%, which is 5,90,000. Yeah, 5,90,000. Now my point is very clear. Sir, please understand, these special cases are important. When you convert from composition to normal, whatever stock is there, take credit. When you convert from normal to composition, whatever stock is there, on that you have to pay tax. These are all special cases, important. Now here what I am talking, please listen carefully, sir. Somebody is asking one doubt. Sir, per quarter is based on months we held the capital good? Yes, definitely answer is yes. How long we have held the capital good? Let's say if it is 7 months, we'll take it as 3 quarters. If it is 4 months, we'll take it as 2 quarters. Simple. Yeah. PQR Limited procured a capital good machine for 5 lakh rupees plus GST 18%, 5,90,000. Now I'll ask you one question. This 90,000 PQR Limited would have definitely claimed as input tax credit. This 90,000 PQR Limited would have definitely claimed input tax credit. Now I'll ask you one question. Why did government give input tax credit? Obviously, government gave input tax credit because government loves that person, because he's a registered person, he is going to pay output tax and he is going to use that machine for business purpose. Now imagine one fine day, after 11 months of usage, he sold the capital good for 3 lakh rupees. He sold the capital good for what value, sir? 3 lakh rupees. Then what law told is, government ego is hurted. We gave you credit because we wanted you to use that machine for business purpose. But if you sell that machine, we are not at all okay. Then what they told is, we'll apply provisions of section 18 subsection 6, which talks about supply of capital goods on which we have claimed input tax credit. They told one side you calculate 90,000 minus 5% per quarter for 4 quarters, because if it is 11 months, it will be 4 quarters only. So it becomes 20%, 90,000 minus 20%. So it becomes 72,000. This is one figure. Okay. Other side. What is sale value or transaction value? Which is nothing but 3 lakhs. GST is equal to 3 lakhs into 18%, which is 54,000. Now, law told these two, whichever is higher, that is required to be paid. And the higher figure is 72,000. So what they told is that in case of supply of capital good on which input tax credit is claimed, you have to pay higher of the following two. Number one, ITC minus 5% per quarter or part thereof. Number two, tax on transaction value. These two, whichever is higher, that amount you have to pay to the government. Guys, getting clarity? So what are the two things? Number one, ITC, what we have claimed, minus 5% per quarter or part thereof, or tax on what value, my dear friends? Tax on transaction value. These two, whichever is higher, that is required to be paid to the government. Very, very interesting and important concept. And in fact, the last concept of our beautiful discussion of input tax credit. Very, very interesting and very, very important concept, my dear friends. No doubt about it. And that is the story of discussion about this fantastic topic known as input tax credit. So in this discussion and today's discussion, we have spent some brilliant time on discussion about time of supply and also about input tax credit. So in fact, my dear friends, if you observe, a lot of major topics we covered in our discussion. So please understand that prima facie in exam, input tax credit, time of supply, supply topic, value of supply, registration, and of course one scheme called composition scheme, and finally 3-4 marks will come from exemptions also. These are the major important topics where good chunk of marks, almost about 90% marks, will come from these topics itself. And let me tell you, ITC pakka question will come, value of supply pakka question will come, time of supply pakka question will come, and supply topic almost every time question will come. So these are the topics where tremendous short questions will come in the exam. So somebody is asking, sir, stock should not be older than 1 year, right? Yes, it should not be older than 1 year. Next, somebody is asking, sir, is return chapter important? Yes, high possibility that 4 marks may come in the exam, and generally keeps coming also. And if you look at all your past exam questions, that's enough. Clear, friends? And one thing I really want to tell before I conclude our discussions is that we also put up on our Indigo and YouTube channel past exam solved question papers, and we also discussed RTP, and all the past exam papers and RTPs are there on our YouTube channel. And one point is very clear, just that today's session is over doesn't mean that it is done. At any given point of time, any queries you get or any doubts you get, feel free to get back to us. Feel free to comment on any of my video. I'll be more than happy to respond to your query. Or you can also at the same time message or post your query on the forums. We'll be more than happy to answer your queries, guys. And I wish you all the very, very best and wish you all success to all of you guys. And thank you so very much for all your time and effort, which really makes a lot of sense for us. Thank you so very much, my friends. Thank you. Thank you.
Sir, tomorrow is there class?
Thank you so very much, my dear friends. So session was for 2 days planned. That was for yesterday and today. So yesterday we discussed those topics and today these topics. And if there's any next session, we'll update you guys. Next session, if we plan, we'll update you in terms of when are we planning the